Hello everyone, a warm welcome. My name is Adam, and I'm going to obviously be doing my weekly analysis, and I'm going to be having a look at the currency market, starting off with the dollar index and looking at the majors and what I'm looking for in the week ahead. And I was going to ask you if I wonder if you could do me a kindness, if you could click the like and subscribe button. I know that a lot of people do that. I'm actually really keen to get my subscribers up to 1,000. That's my immediate target, and I wonder if you could help me do that. Click the like and subscribe button, like the video obviously, and click the subscribe button, and I would be very grateful for that. And again, much appreciated. So I hope that you're well. It is Saturday evening, 6:45 p.m. and I've decided that I quite like getting these videos done on the Saturday and then having leaving the Sunday wide open for myself and not feeling like it's homework that I have to complete before the week ahead. So having a look at the currency markets, it's 20th of February. I mean, I can't believe it. We're heading towards that in the UK. The sun is now setting, heading its way towards setting at 6 p.m, which is a big shift from 3 in the afternoon, sort of 3:30 in the afternoon. So having a look at the currency markets, and also, sorry, I know that I'm sort of dragging this on a bit, but also feel free to put comments in the comment section if there's other topics you would like me to cover, other markets you would like me to analyze. I'm happy to do that. This is just my go-to stuff every week. But I do have a list of other topics and things that I'm going to produce content on. But if there is something that's time sensitive and you'd like me to do it soon, let me know. Put it in the comment section and I will get on producing that for you. Okay, if there's a market you want me to analyze and put my 2 cents in, I'm happy to do that. So having a look at the dollar index. So last week what I was looking for based off, and I'm just going to shift this over to a weekly time frame. But before I do that, I just want to comment on the still bearish candle at the moment sitting above $90. We have a lower high. We do have range-like behavior because we have on the daily a high and a lower high. We have and a lower low. But this, we're just effectively right now ping-ponging between $90 and $91. If I just shift this over to a weekly version of that chart. So at the moment, that price action is still being relatively bearish. We did close, we didn't close below last week's candle, but we did actually close lower. So we're still more bullish than bearish. And actually this week it was very typical, and this is why I say it's range-like behavior. The market sort of ping-ponged one way and looked as though that wasn't going to be the case, and then reversed its position and then moved the other way. So what does that mean? Well, if the trend to the downside was very, very strong and was not to be challenged, then it would have just immediately sort of flowed on and headed lower, broken through 90 and headed lower. Instead, what it did was an unexpected and actually, I would say, significant move to the upside. We'll have a look at euro dollar in a moment to compare, and then did another move to the other side. And that is not really what a normal, happy, healthy trending market should do. And therefore, I would see 90 as a relatively significant level now, because the market is definitely struggling with 91. And actually, the future becomes a little bit less clear on this. It still is leaning more to the downside, so it's a 60-40 bearish setup. But I would just comment that that odd behavior could be the beginning of a range bound. So usually when the market is doing it, it's ticking along, very nice and happy and healthy, and then suddenly it changes its behavior, that can often be the beginning of a range, as opposed to, just a once-off event. So looking here at euro dollar, that weekly, having pulled back into the moving averages, producing bullish candles here, is still implying, again, it is more, it's relatively keen on heading to the upside. However, that is an indecision candle, which means the market roughly open and closed in the same place over an entire week. There was a big drop and then essentially a recovery. Didn't really bounce off 1.2, it didn't connect to that. So again, range-like behavior. There is, and I consider this substantial, there is a resistance band. So usually I will try to find a crisp, clear level, and at other times I'll just highlight this without saying that this is, to me, this is not significant enough to be considered a monthly or weekly level. But I would say there's some local resistance there, and therefore I would like to see how the market can, if the euro dollar can push through that. And if it can, I think it's pretty, then at that point it'll be free to run up to 1.23. So again, of course, this weird behavior now means that, okay, it's possible that the market is going to ping pong between the 91 and $90 levels on the dollar index, and also on the euro dollar is going to ping pong between these levels. But I'm going to lean towards plan A, being that it's going to attempt to follow through and push up and get over the line. That'll be my plan A. Plan B is if it rejects this area again and heads down to 1.2, then I will adjust accordingly. So then moving on to sterling and having a look at that. Beautiful. This was really a nice performer. Now sterling it's interesting. If you look at euro dollar, this is just a general commentary, right? And if you look at euro dollar going back a while, you can see here, for example, going from 2018 all the way down to 2020. This was an incredibly choppy weekly chart, really almost, I would say, it's certainly not desirable for trade. And surprisingly, sterling was a better performer by comparison, just a little bit better. Look here at the daily, it is messy, but the flow is pretty much to the upside. Trending on the weekly, it's now starting to enter that weekly overextension, and it's bumped its head up against 1.4. So for me, the first thing I would be looking for this week is to see how it handles 1.4 level. Is it able to break through and then continue up? The next level that I've got here that I think is really significant is 14350, which gives us a little bit of room for some profit making, but we are starting to enter a little bit overextended on the daily compared to recent behavior, and a little bit overextended on the weekly compared to recent behavior. So therefore, a bit of a recuperation or potentially building up to a breakout pattern would be great. Again, if we get that weaker US dollar, it's going to help with that anyway. Could it just keep going? Absolutely, it could keep going. And so this week, what I'm really going to be ideally looking for are breaks and retests, ideally of 1.4, and looking for buy opportunities to the upside. Okay, so this supports, aside from the fact that 1.4 is a significant level and it could be knocked back from that, again, this still leans towards a weaker US dollar, stronger cable, stronger GBP, stronger sterling. Moving on to Aussie US dollar. Big mover last week, kind of broke free, and I'm actually going to mark this, let's call it that resistance band. Just mark it, there was definitely something there, but messy. And managed to push its way through that. That weekly, really good. This is a just a great price action. Beautiful. So it should now be free to continue up to 0.81. So any kind of pullbacks intraday all the way up to there should be good. Again, leaning towards the fact there's not much in its way now. So if the dollar doesn't decide to make a move, I would expect this to continue to climb higher. Kiwi dollar struggling a little bit with its level at 0.73, and trying to get through that. Managed to get outside of this band as well. So again, a bit of a weaker US dollar helped do that. I want to see, I'm going to have to watch this week. Similar to sterling, I want to see how it handles 0.73, this area here, and see how it's going to move on towards 74.50. So if sterling is now free of its level, can climb higher, Aussie dollar is free of its level, there's a possibility, of course, Kiwi dollar could do the same thing. They just hint, as I said, they lean towards a weaker US dollar. We've just seen some big moves back and forth on the US dollar, and therefore that could be a factor. Potentially not. Just going back to that Aussie dollar, I wanted to mention something here quickly. It's a very strong currency. If I just go across, have a look at Aussie Kiwi, pushing a little bit higher there. If I look at Aussie CAD, big push out over there. The weekly look very similar to Aussie dollar, US dollar. Aussie Swissy also breaking free there. Very similar look. Aussie yen. So in terms of correlation, having broken through that level, it's just indicating the Australian dollar very strong. Okay, dollar yen. Dollar yen having pulled back. So last week I spoke about it essentially going higher. It did it really well. I wasn't really expecting too much of a move because overall I don't consider it a tradable instrument. And I could see obviously it did a bit of a move and then kind of gave a bit of that back. Headed a little bit higher. At this point in time, it does its own thing. It is in an area, so if there's a bullish candle on Monday, there may well be a buy opportunity to the upside. And I think it's very important to state at this time that dollar yen can do its own thing. It does not have to subscribe to whatever the US dollar is doing. I've seen dollar yen, it's not correlated as a fixed rule. It can become correlated or inversely correlated, but it doesn't have to do that. So for me, my experience has been dollar yen will do what dollar yen will do. Then we've got dollar Swissy, which I was actually looking at this and expecting that to continue to head down relatively smooth fashion. Instead, although it broke the low, it finished up higher, and is now, this is where it gets interesting, is now potentially has broken back up above this resistance band and set up with a bullish candle. So this implies that yes, it's stuck. 0.9 is a resistance level for it. It's finding that quite significant, but also produced a bit of a bullish candle here. So there might be a bit of bobbing around, might try and take another run at 0.9. Potentially still find support above this area, so this is going to be a bit tricky for me. I will be more interested once I see it back over 0.9 or back below this resistance band. Okay, but my expectation generally was to see that head low, and a weaker dollar would help do that. Dollar CAD, in the meantime, actually it still hasn't really broken free of this particular area. It's got local levels of support at 126, 25, call it, and also overall it's still hitting low. It's got room to go down to 1.25. So it's looking as though it's starting to breach these lows, and therefore that possibility of it heading all the way down is certainly pretty real. And that's it. So really, for me, just to sum up, looking and expecting, leaning towards plan A being the dollar index, although it's exhibited some potential new range bound behavior, still leaning towards the dollar being slightly weaker. If it does another bounce off that level, climbs higher, then that just further supports the idea of more range bound behavior. But overall, the weekly charts still seem to point towards, although there was a bit of a disruption, they still point towards the fact that the market is more bearish than bullish. And so I'm gonna expect that, at least as part of my plan A. So there we go. Thank you, ladies and gents. Have a fantastic week, and please do me that kindness of liking and subscribing, and of course giving me some feedback on any kind of content that you'd like to see. I have lots of ideas, and I am in production on those videos, but again, if there's anything specific, it really could help. Thank you very much. Have a great week.